I'm wondering if you can just sum up the quarter quickly for us, and particularly your plans to return capital to shareholders as share repurchases are on hold. But you did raise the dividend, which signals some sense of confidence about your bottom line and your cash reserves going forward.
Well, thank you, and thanks for having us this morning. Yeah, we've kind of fought through the attendance issues associated with the pandemic, and we've created now the protocols we need to really be able to sustain our production for the duration, whatever that turns out to be. Since the pandemic started, we've actually been able to hire 3,000 people. So now we have some predictability in our workforce, and that allows us to see our way forward on our business. I'd say the main thing is that we've reiterated our guidance for cash flow for the next 5 years to be $3 billion for that cash flow.
We're obviously very focused on the election this week and the outcome. And traditionally, one would think of a potential Democratic administration as one that would cut defense spending. But the former vice president has talked about the need to reinvest in emerging technologies and specifically the need to return production and procurement to American manufacturing. What do you see as the outlook there? How could that potentially benefit you?
Yeah, great question. Two parts of that. One is that when you're in the Department of Defense and doing national security, you're looking externally, and typically the issues are driven by what's happening in the rest of the world, and that means it tends to be pretty bipartisan. So we've worked with all the administrations of the last several terms, and we're frankly building ships for the administration after next, and so we don't see that as being a huge driver. Bringing innovation to our supply chains is really critical. We have a domestic supply chain, almost 100% domestic, and we sit in that place where we can do not only technical innovation, but economic development and support coming through the pandemic. So it's a pretty unique place for our industry to be there.
You have a $45 billion backlog. How many quarters does that get you through? And to what extent does the existing fleet need modernization? How many administrations would that span?
Well, our longest contract in that backlog goes out to 2032, I think. So, but about 85% of the work over the next 5 years is under contract, and about 22% or $22 billion of that backlog is already funded. So it's a great foundation for us to build off of going forward as we support our customers and all of our national security customers, but particularly our Navy customer. You know, the Navy's operating tempo right now is as high as it's ever been. And that means they need ships at sea, they need repair, they need support. And we're right there. If there's a Navy ship there, there's a good chance you're going to see one of us there with them.
Mike, you mentioned that you've hired 3,000 people since the pandemic started, but like many manufacturers, I am sure that COVID has taken a toll on your workforce and its ability to actually deliver things on time. How are you grappling with that? Is it getting worse? Is it getting better?
No, actually, the first couple of months were really tough. We took a pretty big divot in our workforce in terms of attendance. And our focus was on making sure we preserve that workforce for the long term, not for the near term. So we've come out of that now, and we've actually in our business today, even though we've had a couple of thousand cases across the enterprise since the beginning of this, we only have a couple of hundred active cases going on now, and it's at a lower rate than we saw earlier this summer. I don't know what the winter's going to bring, but I feel confident that our team has the protocols in place to protect the workforce and make our job sites the safest place for employees to be.
Shepard Smith here. Thanks for watching CNBC on YouTube.